Hey guys, I really hope everyone is doing okay, especially with what's going on right now. I know a lot of people have been negatively impacted by the current situation of things. I know people lost their jobs, people got pay cuts, people got hours cut, and it kind of looks like it's getting worse. However, I do want to tell you guys to hang in there, stay active, stay healthy, keep a positive mindset, and we are going to come out of this a lot better. 2020 hasn't been the best year so far, but with a positive mindset, we are going to come out of 2020 a lot better than we started 2020. If you look over the course of history, the human race has been through worse and we've always survived. We keep evolving and we keep thriving, so we are going to survive this. Hang in there. A little background on myself: my name is Chris and I recently started investing. It all started on the 28th of March 2020, around the time we were starting to stay at home. I set up my Robinhood account, put in about $100 and purchased my first share of Wells Fargo stock. Was about $25 at a time. It kind of went downhill from there. Throughout the month of April, I ended up putting in about $20,000 of my savings in there, and I averaged a profit of $5,000 a week. This was crazy, way beyond my expectation. And I did kind of get greedy, and I started gambling in the stock market, and it all came back to get me. I lost a whole bunch of money as a result of my greed, and it ended terribly for me. Money seems to be a really sensitive topic in society, and nobody ever wants to talk about it. The upper or the more wealthy class in society never want to teach the middle class or the lower class in society how they make money or how they save money. I also went to school, high school and college. I never saw a class or took a class where I was taught, hey Chris, here's how you make money, here's how you save, here's how you invest, and here's how you grow your wealth. And I think this doesn't make sense to me. One study by the CDFA shows that 28% of divorces is caused by financial issues. A similar study by CNBC shows that 80% of Americans end up living paycheck to paycheck. This means their income is right here and their expenses is right here. That's 80%, 8 out of every 10 Americans. I think this is a huge problem, and investing could be a possible solution to this problem. Before we go any further, guys, quick disclaimer: I definitely am not a licensed financial advisor, and this is not licensed financial advice. I'm just a guy who loves investing, and this video is strictly for educational and entertainment purposes only. I strongly believe everyone needs to invest, and here's why. Investing could not only be a good hobby, it can also be an excellent side hustle. Investing also helps you protect your wealth from things like inflation. For those of us who might not know what inflation is, let me paint you a quick picture. Say today you had a $100 bill. You drove up to your local grocery store, went in, picked up a cart, filled up the cart with a whole bunch of stuff, went to the checkout line, checked out, paid, went home. All fine and good, right? Say exactly 1 year from today, you have a $100 bill just like you did the year before, drove up to the exact same grocery store, got a cart, filled up your cart with the exact same items you did the year before, and then you drove up to the checkout line, and then the clerk says, hey, I'm sorry, this $100 bill is only gonna get you half the stuff in this cart. This is an extreme example. In this case, it's a 50% inflation rate, but inflation is real. Inflation robs you of your wealth without you even spending your money. So in this situation, saving alone by itself is not enough. You not only have to save, you also have to invest constantly whatever you save. There are several different ways you could invest. Some of them include real estate, stocks, bonds, gold, cryptocurrencies, and the list can go on and on forever. However, I personally prefer stocks, and here's why. Say you own the property, a piece of real estate, say in Kentucky, and you got a job offer in California. Obviously, you're gonna have to move, right? Here's the steps to getting rid of your real estate. First, you're gonna have to find a realtor. Then you're gonna have to list it up on some kind of realtor app like Zillow.com or Realtor.com. And then you're gonna have to find a buyer. You're gonna have to negotiate with the buyer, come to terms, and then bring in your bank to kind of mediate the transaction. This 5-step process takes about 5 months, and this is a very long time. Stocks, on the other hand, are more instant. All you have to do is get a brokerage, set up your account, and then with a push of a button, you could be in and out of stocks that quick. That's why I personally prefer stocks. There are different brokerages you could possibly use. There's Acorns, Robinhood, TD Ameritrade, Charles Schwab, Thinkorswim, and the list can go on and on. Personally, I do prefer Robinhood, and here's why. I feel Robinhood is so user-friendly, and the app was pretty much designed with a beginner investor in mind. I feel it makes me love trading and love investing more. That being said, I do have a link in the description to Robinhood. You could sign up today and get a free stock. You're gonna get a free stock. I'm gonna get a free stock if you use the link below, and I call that a win-win situation. So go ahead and start investing today with Robinhood below. With the help of a friend, I currently manage 2 accounts with Robinhood. One is strictly an investing account with a long-term perspective in mind, while the other is a day trading account. For the investing accounts, like I said, we have a long-term perspective in mind. By long-term, I mean 5 to 10 years, possibly a lifetime. But the day trading account is strictly day trades, like the name sounds. Maybe sometimes we play swing trades, but we prefer to be in and out of positions within the market day. Today we're gonna go over both accounts, the investing account and day trading account, to kind of help you guys see which strategy does better than the other, and kind of help you guys make a decision if you were trying to come into the stock market of, do you want to be a day trader or do you want to be a long-term investor? First, we're gonna go over the investing / long-term account. We've currently had this account for about 7 weeks now, and right now we have 6 stocks in it. Well, we have 5. We sold one yesterday because we weren't sure about the company, but that's for a later video. Today we're gonna go over 3 of those 5 companies in this account. First place is Uber. We all know Uber, the rideshare company. But Uber is a lot more than just rideshare. They do food delivery and they do a whole bunch of other stuff. I strongly believe Uber is gonna be one of the top companies in the next coming 5 to 10 years. So watch out for Uber and buy some if you can right now. We currently own about 205 shares of Uber stock, purchased at an average cost basis of $32.84, and our current portfolio has this valued at about $6,700, so $6,700. Next is Facebook. Facebook is the social media giant. We all know Facebook owns Instagram, owns WhatsApp, owns a whole bunch of other stuff. I strongly believe Facebook is gonna be #1 company in the world 10 years from now. Yes, Facebook is gonna pass Apple, Microsoft, and Amazon. I said it here first. Go grab Facebook stock if you can right now. We currently hold about 10 shares of Facebook stock. We do want to get more if we get a chance to, but right now it's just 10. Purchased at the average cost basis of $228.72. And right now it's currently valued at about $2,400 in our portfolio. Last but not the list of 3 of 6 stocks is Berkshire Hathaway Class B share. For those of us who might not know, this company is a company run by the #1 investor of all time. Yes, Warren Buffett. He also happens to be my idol, so I really hope he sees this video and he's proud of me. So we currently hold about 105 shares of Berkshire Hathaway stock, purchased at an average cost basis of $174.90. So in our portfolio right now is currently sitting at a value of $20,000 in Berkshire Hathaway. In total, this account is currently valued at about $48,000. Initially, we started with $46,000, so this account is currently up 6%, or exact dollar amount of $2,000. Next is our day trading account. We've had this account for about 6 weeks now, and like I said earlier, this is strictly a short-term based account. Our strategy is we kind of watch the market futures in the morning and decide if this is going to be a trading day versus not a trading day based on how the futures are going. Today we're going to go over some of the trades we placed in the past week. First, we placed the Delta Airlines. We all know Delta Airlines, one of the biggest airlines in North America. They're actually in real big trouble right now, but we'll see how that pans out. We went in there, purchased about 2,000 shares of Delta stock at an average cost basis of $27.48, and we sold out later that day at an average of $28.19. This calculates to a 2.6% profit, or $1,400 to be exact. We made that in a couple hours. Next on the list is Wells Fargo. Wells Fargo is one of the biggest banks in North America. Really good bank, by the way. But the banks are kind of in trouble right now, but we'll still talk about it. We went in there and purchased about 500 shares of Wells Fargo stock at an average cost basis of $25.01. Sold out later that day for an average of $25.40 per share. That's a 39-cent profit per share, which is a 1.5% profit. Last but not the least was Discover Financial Solutions. We all know Discover Financial. I think it's solutions or services. I'm not sure, but whatever. It's one of the biggest banks / credit cards company. If you're in college, if you're a college student, you probably know this company. That was actually my first credit card. It came from them. But we went in there, purchased about 600 shares of Discover stock at an average cost basis of $47.56. We sold out later that day for an average of $48.46, which is a 1.9% profit, almost 2%, or exact dollar amount of $540. In total, this account is currently valued at about $72,000. We initially started with $60,000, so we're up about $12,000, which is about 22% profit. I have to say this account has performed way better than I expected and way better than the investing / long-term account. Just a quick recap on both accounts. First, our investing account is currently valued at about $48,000. Initially, we started with $46,000, so we're currently up about 6%, which calculates to an exact dollar amount of about $2,000. Next, our day trading account is currently valued at about $73,000. Started with about $60,000, so we're up 22%. Currently, exact dollar amount of about $13,000. So in comparison right now, I have to say the day trading account is kicking the of our investing account. is pretty bad actually. So in the short term, I kind of believe day trading works a lot better than investing does, but in the long term, we're gonna see how that goes over time. So that's it for the video, guys. I do plan on posting weekly based on the updates on the investing account versus the day trading account, so that you guys can kind of get a feel for, hey, this strategy is doing better than this strategy, and kind of help you guys make your choices easier if you were gonna pick a strategy with investing. I really hope this video didn't come across to you as me being boastful, saying, hey, I'm Chris, this is what I got, because really I don't have much. This video was more to kind of encourage you guys to start investing today. I honestly believe if everyone started making better choices with their money, the world would be much more safer and better place than it currently is. That being said, guys, I really hope you guys stay safe, hang in there, like I said, keep a positive mindset, and see you guys next week in the next video.